What's your favorite? Water slides? Yeah.
The Pekina family checks in for their flight to Florida, a trip that may not have happened if the Canadian dollar was lower.
We normally wait. We postpone the trip, yes. Sometimes, or look at other destinations.
But this time, the Pekina's spending money will stretch further. In just the past 2 months, the Canadian dollar has climbed almost 10%, in part thanks to the Bank of Canada.
The economy clearly no longer needs as much stimulus as we've been giving it.
The central bank's first interest rate hike in 7 years all of a sudden makes it more lucrative for currency traders to hold on to Canadian dollars and get a lift from newfound confidence in Canada's improving economy. But there are other major factors driving the dollar's rise that aren't all Canada-centric.
This is not all about us. A lot of this is a weaker U.S. dollar.
Weighed down as confidence wavers in both the U.S. economy and Donald Trump's tax and spending promises. Today, the International Monetary Fund actually downgraded its forecast for U.S. economic growth, but it predicts Canadian growth will be the best in the G7 this year. Still, analysts say there may be one thing missing in the equation to sustain a stronger loonie.
I'm a big believer that oil is still the single most important factor for the Canadian dollar.
The Canadian dollar and the price of oil, which typically rise and fall together, are unusually out of sync. The dollar has climbed and left oil behind, below $50 a barrel.
To get back to parity on the currency, we would probably need about $100 oil.
Back at the airport,
Shopping. We're going shopping a little bit.
the Pekinas are eager to cash in on the more valuable Canadian dollar while they can, just in case the loonie's flight is only a summer fling. Jacqueline Hansen, CBC News, Toronto.